Hey everyone, it's Aaron. Will the stock market crash in December of 2021? There's a lot that goes into it, but I think it comes down to a few key elements. Number one, what does the economy do? And number two, what are the headwinds? And number three, what does the government do? And the headwinds being the you-know-what that we're all dealing with the last 2 years. So let's take a look at how all three of these interplay with each other by looking at two individuals who have come out this week regarding the news coming out of South Africa. It's Bill Ackman, a star hedge fund trader at Pershing Square Capital Management, his firm, and then there's Jerome Powell. Everyone knows him, J. Daddy Powell, who prints all the money at the Federal Reserve. So these two individuals have starkly different opinions on the same piece of information of what's coming out of South Africa. So in this video, I'm going to show you how their opposing views could actually result in the same outcome if certain things work out that would drive the stock market higher, I think, into the end of December. And then unfortunately, I think we're going to have a crash in the first quarter of 2022. Now, I'll be diving into that in this video, so smash that like button and go ahead and get this video out to more people who want to know more about the stock market, what's happening, how the headlines are giving us clues about what the government may do, and how we can maybe make some money. So hit that like button and let's get started. All right, first, let's look at Jerome Powell and his view on everything as of the last few days. He told the Senate that this poses downside risk to economy and complicates inflation picture. Federal Reserve Chairman Jerome Powell believes that the new this of that and a recent uptick of those pose a threat to the U.S. economy and muddle an already uncertain inflation outlook. The recent rise of this and the emergence of that pose downside risks to employment and economic activity and increased uncertainty for inflation, he said in prepared remarks. Greater concerns about this could reduce people's willingness to work in person, which would slow progress in the labor market and intensify supply chain disruptions. Okay, so on the surface, seems like a case for the market to go down. But I'm going to circle back to this in a second, and I think it actually could be a catalyst for it to go up based on what Bill Ackman said. All right, let's take a look at Bill Ackman. He says this could end up being bullish for the markets. And there he is. Investor Bill Ackman said the new this of that could actually give U.S. stocks a boost if symptoms turn out to be less severe. While it's too early to tell, early reported data suggests that it's mild to moderate symptoms and is more transmissible. Ackman said in a tweet Sunday evening, if this turns out to be true, this is bullish, not bearish for markets. Now, I want to pause here. I think the reason why he's saying that is if it's deemed less threatening, then we can continue going back to getting the economy on the trajectory that it was, hopefully in pre-2019, pre-2020. But if it's worse, obviously it's going to have that effect that Jerome Powell's worried about, where people don't want to go into work, supply chains get disrupted, things like that. Now, here's why Bill Ackman, though, is somebody that you can rely on what he says to at least to a certain degree. He is such a good trader. He's made so many good trades. Specifically, we're going to talk about one he did last March. So Ackman's comments have been widely watched throughout the health crisis and the market's turbulent ride over the last 2 years. At the height of the crisis in March 2020, Ackman went on CNBC to warn investors that hell is coming and urged President Donald Trump and corporate America to shut down the country for 30 days to contain things, calling it the only option to rescue the economy. But days after the interview, Ackman revealed his firm exited the short positions that he had put on just as the S&P 500 bottomed, pocketing more than $2 billion in bets against the markets that month. Now, those positions were put on to protect his portfolio. He had a lot of his portfolio in airlines, hotels, restaurants, all industries that would have gotten destroyed by what happened, that did get destroyed by what happened last year. So his short position protected him so much so that it was actually profitable, which is a great thing for a trader. So this gives him, I think, some semblance of a lot of credibility, right? That he was able to call this and then execute on it. So now things are opposite, though. He's saying if this comes from South Africa and it's not that bad, the market could go higher. And Jerome Powell is saying if this thing comes from South Africa, it could be bad and the market could go lower. He didn't say the last part, he just said it could be trouble for the economy and in the inflation picture. But those are the main drivers right now or the main headwinds that people are worried about regarding the market going higher. Now, Bill Ackman's been right about iterations of what's been going on in the last 2 years before. As we can see here, in July, when Wall Street was grappling with this, Ackman said it doesn't pose a significant threat to the economic reopening, and he sees interest rates rising on the back of the big comeback. So meaning he could see that the Fed could increase interest rates while the economy continues to grow, and increasing interest rates wouldn't ruin everything. More recently, at the end of October, the hedge fund manager called for the Federal Reserve to begin reining in the support it has provided to the economy during the pandemic. He said the central bank should taper immediately and begin raising rates as soon as possible. That taper means pulling money out of the economy that the Fed has injected, and also raising interest rates to combat inflation. Pershing Square manages about $13 billion in assets, and the hedge fund was up 27% through October and 21.6% net of fees, according to the company's statements. It followed a banner 2020, during which the fund returned a whopping 70% on net. Ackman has been betting big on a rebound in the restaurant, retail, and hotel industries. His top holdings at the end of the third quarter included Lowe's, Hilton Restaurant Brands, which owns Burger King, Tim Hortons, and one other restaurant, and as well as Chipotle. He picked up Domino's Pizza earlier this year following a pullback. So basically, he's a great trader. He made a huge return last year. He's on pace to make a phenomenal return this year. I mean, 27% for anybody, but even a hedge fund, is really good. And he runs billions of dollars, $13 billion under management, 27% of that. He gets a cut, probably 20% of that. It's a nice number. But here's what he needs. He needs the market to not crash going through December, because he wants to be able to liquidate these positions before the end of the year, because he's compensated on his performance for the entire year. So it's like you're running a race. You're ahead right now, but it's about how you finish. And so if the market takes a crash right before the end of the year and he doesn't have time to get out, it's going to mess things up for his returns. Now, this isn't about him and his billions of dollars. This is about us. This is about us being able to decipher what the whales on Wall Street are doing, what the government and their policies are going to be enacted, and how it's going to impact us. So what I'm seeing is this. If Jerome Powell is saying what's coming out of South Africa is bad, and Bill Ackman is saying it's good if it's mild, he's saying that the Fed will probably continue to print a little bit more, keep the economy up. It's an artificial way to do it. It's like throwing gas on a fire. It'll flame things up more, but then ultimately it's going to be bad down the road. And I'm thinking that the Fed will probably have to continue doing support stimulus throughout the rest of the year, and then we're going to have to pay for it dearly through a market pullback or even a market crash in the first quarter of 2022. And to further bolster the case that I think the government will continue to inject money into the system and not taper just yet, is we have Fauci saying the U.S. should prepare to do anything and everything to fight this. This is just kind of a headline that I wanted to pop up, showing that there's support both on the health policy side and the financial side of the government, because it's going to be a full-fledged effort, I think, to continue the monetary printing that is keeping the stock market up. So what do you guys think? Will the stock market stay up for one more month so that Bill Ackman and all of us who are still riding this thing out can make a little bit more money, can maybe get positioned differently to maybe take our money out just in time before things finally do come down? This is something that I think we're all watching closely, so I'd love to have you smash that like button and get this video out to more people so that more people can see what's going on and kind of see these threads being put together in the media about what's going to happen policy-wise that can either help us or hurt us. So I appreciate you watching. Consider subscribing, and I'll talk with you next time.